Welcome to the Algo Trading Strategies channel. In today's video, I'm going to explore a session-based strategy. So if you don't know already, the goal of the channel is to construct a portfolio of strategies that are based on technical indicators usually. So what I do is backtest a lot of strategies with different logic and then analyze the performance metrics like the Sharpe ratio, the annualized return on investment, the number of trades, and so on. The next step is to select the best strategies that I've gotten so far and then to forward test them to see if there's not overfitting. Of course, we want our strategies to fit the price action so that we get a good performance, a growing account, but sometimes what we did during the backtest is simply an overfit. So when we have a strategy that is overfitted to the price action, it has a tendency to lose a lot when the price action does not fit anymore what the strategy is trying to capture. So of course the ultimate goal is, after having selected properly lots of strategies, is to grow an account in a very steadily fashion without too many drawdowns. So let's look at today's strategies rule. Let's see if it is any good. So here's the idea I had in mind based on the London and the New York session. So as you can see on the chart, I have highlighted the London session in this big white box from 8 o'clock a.m. to 4:30 p.m. So we are in 15-minute candlesticks here in the 15-minute time frame in the New York session, which starts at 1:30 p.m. and ends at 10 p.m. So this is UTC time zone, just so you know. And here the smaller white box is simply the London only session, or just the London candlesticks that are before the New York session. So this range here, I'm going to search for the low and the high. So this is the low, here's the lowest price point of this whole range just before the New York session. Let's highlight it in blue. And also I've got the high of the range here, of the London range. So let's highlight it in blue also. Then what I'm looking for is simply when the New York session starts, a candlestick. So here we are in 15-minute time frame, which closes below the range. So this is essentially a liquidity grab. It essentially hunts all the stops that I have accumulated under the range, the London range here. And then I wait for a candlestick to close within the range again. And here I enter a long. So let's draw a long trade here with a stop loss that is placed here at the low of the previous candlestick that grabbed the liquidity, and then we target the ranged high. And when the candlestick closes above that ranged high, so essentially on this channel, all the strategies that I have backtested so far trade on candlesticks close. So when the 15-minute candlestick closes above this range, we just close the long trade. So here it would be a win. So now you have the strategies rules, the strategy logic. By the way, if you have any other idea that I could test, please drop a comment below. I'm keen to know, of course, what are other ideas I could trade using the sessions information. So now let's take a look at the result of the backtest that I have run using not the 15-minute candlesticks, but the 5-minute candlesticks. As you can see, the result is not very good because the middle chart represents the equity curve, which means that when you start with a capital of $1,000, you end up having around $600. So it looks like this strategy is not good, but I really wanted to give it a try, and I really think that there is something to do with sessions. So the top chart represents the Bitcoin price in black, and all the trades, the small thin green bands as well as the green dots, represent all the trades. So basically that strategy trades during the New York sessions, so not on the weekends. So in 2019 and 2020 it was not that bad, it was kind of growing and seems to be very correlated with the growth of Bitcoin itself during that very big 2021 bull run. But then obviously it gets absolutely destroyed. So I don't know exactly why, but at the end we have some kind of life again for the strategy because it starts to grow again a little bit. But that whole price section since 2021 Bitcoin peak, the whole time high at the time, until about 2024, the beginning of 2024, it's an absolute mess. It just gets destroyed. So what are the lessons here? Maybe the idea is completely bad. I mean, at first waiting for the liquidity grab, then take the opposite trade. doesn't seem too bad to me, but maybe it's not a good idea on Bitcoin. Maybe it is for Forex pairs, but here on Bitcoin it doesn't seem to work. Another lesson is maybe the following one. This is the first strategy that I test on the channel using a horizontal stop loss. Usually, for example, for the simple moving average price crossover strategy, the stop loss is the simple moving average itself. So this is a moving stop loss, but here the stop loss is horizontal, very fixed. This is at a very specific price level, so a classical stop loss, I would say. And it seems to get hit often on this backtest. So lesson number 2 would be to stop using stop losses that are horizontal. And lesson 3 would be maybe to fiddle with a little bit with the logic, try different time frames, maybe not wait for the candlesticks close to enter or exit the trade. And also, we could try to use a filter. For example, a simple moving average that determines whether or not we are in a bullish trend or a bearish trend. So for example, we would have avoided all that drop in performance if we would have used a long-term moving average, for example, to filter out all these trades during the bear market of 2021, 2022 on Bitcoin. So hope you found this quick study today interesting, using the London sessions and trading the liquidity grab on the London range. If it's the case, please hit the like button, and I see you in a future video where I'll backtest another technical indicator, other strategies rules, hopefully a good one this time, but I have also to show you some failures, or at least strategies that doesn't look good at first. So see you in tomorrow's video. Bye bye.